Stocks up for the day. The NASDAQ 100 really up over 1%. The S&P 500 up 0.20%. We see bonds also up about 0.5%. Gold down 0.36% as always. Let's jump into the S&P 500. Now, the candle that we see drawing, the first day of the latest weekly candle, is a huge down candle, but the market was up 0.20%. Well, again, remember, we use Heiken Ashi candlesticks. I'll make sure to put that in the training, linked at the end. If you are listening to us, you can go to the website chartingwealth.com or our YouTube channel. You can find that training also. It's on Heiken Ashi, Heiken-Ashi candlesticks. It means average pace, I'm told, in Japanese. And that average pace is blowing through the prior trend line, going down, even though the S&P 500 was up a little bit for the day. And also the price percent oscillator still heading down. Derivative oscillator losing some downward momentum. We go from the weekly to the 2-day. What do we see there? Again, we got a long wick on the bottom. Now the last 2-day candle finished on Thursday, so this latest 2-day candle is drawn. Again, still a red down candle, but a long wick on the bottom. Now, of course, that typically means when you look at candlesticks, when you have a long wick on the bottom and a red candle, that the bears were able to push things way down and the bulls were able to bring them up somewhat, but still a red down candle. We are getting very close. Gosh, I guess you could call that that's really almost impossible to see if that is a crossover going down or not. I'm hesitant to call it since it's just not clear, and we have the derivative oscillator is still green, so we'll continue to keep our eye on things. Maybe this next 2-day candle will be decidedly down and easier for us to call. What do we see on the 4-hour candle? Down in the morning, bit of a recovery in the afternoon. Derivative oscillator losing downward momentum. Price percent oscillator still heading down, but not at the same strong angle it had been previous there too. So again, we still have the 2-day candle in a confirmed up move, the weekly candle down. All things being equal, the market does tend to move in the direction of the largest chart. Just don't feel comfortable yet calling that a strong down candle. So on the 2-day, as far as there being a 2-day crossover. So we'll wait and see. Remember, it's always easier to make money than make it back after you have lost it. So we want to be cautious, not foolishly so, but we don't want to be throwing money in the wind. Remember, we want to have clear trends to follow, and we don't have one at this point. So we'll continue to keep our eye on things and see how this market shapes up. Okay, we go from the 2-day back to the weekly, and we go from the S&P 500 to the Qs. Now, the NASDAQ 100 up pretty significantly, 1.03% for the day, still starting the week off with a red down candle. Derivative oscillator losing downward momentum. Price percent oscillator still heading down, not at the same stronger angle it had been. 2-day chart, again, hasn't crossed over, going down. The second 2-day candle showing 4 days of down movement. Price percent oscillator barely heading down. Derivative oscillator still positive. We go from the 2-day to the 4-hour. What do we see there? We see down movement in the morning, bit of recovery in the afternoon, again with the Heiken Ashi candlesticks. Derivative oscillator losing downward momentum. Price percent oscillator flattening out, not going down at the same strong angle. So we'll continue to watch and see what we see, keeping in mind that the weekly is still in a confirmed down move, 2-day in a confirmed up move. Don't have a trade yet, waiting to see if that 2-day is going to rotate over going down. So we'll keep the powder dry when it comes to our 2 stock indexes. Next, we go to bonds. What do we see happening there? Bonds up 0.41%, actually going into the 5th week, and so far showing strong up candle as far as the Heiken Ashi candlesticks go. Derivative oscillator gaining upward momentum. Price percent oscillator still heading up. Remember, we had that weekly vertical crossover. back on the week ending the 30th of November. So again, going into the third week of what appears to be continued up movement, we go from the weekly to the 2-day. What do we see going on there? Up movement in the morning, bit of a pullback, not a solid red down candle in the afternoon, but a bit of a pullback in the afternoon. Derivative oscillator nonetheless gaining upward momentum throughout the day. Price percent oscillator heading up on the 2-day candle. Forgive me, I'm running my 2-day and my 4-hour together. Prior 2-day candle up strong. The latest 2-day candle, a bit of a pullback. And again, sometimes when you're running through these charts, the reason, good lesson for us to learn here, folks. The reason that we keep our notes as we follow the charts is they help keep us honest when we're using our daily market worksheet. That way we don't get things wrong because we're focusing on time frames one at a time. So the latest the prior 2-day candle ending the 6th, strong green up candle, the 2-day candle that just finished drawing, still an up candle. It's not a solid red down candle, but it does show a flattening out. Again, price movement not ending above the prior 2-day candle with a wick on top, no wick on the bottom. So again, sorry the confusion there. I was jumping too far ahead, too quick on that 4-hour chart. Now let's go to the 4-hour chart. It's exactly what we saw on the 2-day. That's what got me confused. Up in the morning and then a bit of a pullback in the afternoon with a red open box candle. Again, like I said, not a strong down movement like we saw in the morning on the 7th, Friday the 7th, but we see a red open box, which again means caution. We see that the derivative oscillator continuing to lose upward momentum. Price percent oscillator, however, is still going up, but again, looks like we're sort of sliding sideways right along that 119 mark or so. So just keep your eye on things. If you jumped in after that weekly vertical crossover and rode things up somewhere, around the 115 mark up to about 118, as high as 119.20. Just be careful and don't lose that $3 of virtual money that you made in that trade. Just keep your eye on the 4-hour chart. So we go from the 4-hour on bonds to gold now. Gold, the only down chart for the day, down 0.36%. Going to the second week of up movement on gold. Remember, gold rotated over, going up back on the 5th of October, up for 3 weeks after that. Sideways and down for 3 weeks, and then another 2 weeks of sort of trying to move up and sideways, but going into the second week so far of a decent green up candle. Now again, we don't call this latest candle, particularly the first day of a weekly candle. It's a 5-day candle, just the first day. Things, of course, are subject to change. Derivative oscillator gaining upward momentum. Price percent oscillator heading up. The 2-day candle, of course, has finished drawing, and that's the third day of strong up, third 2-day candle of strong up movement, meaning 6 days. Okay, God, could I make this sound more complicated? I apologize. We see that the derivative oscillator is gaining upward momentum, price percent oscillator heading up. So that's looking quite nice. Then we go to our 4-hour chart, and you see what our dilemma has been. We haven't had an easy jumping in point since the 2-day chart rotated back over going up. That happened back on the Tuesday, the 2-day candle ending Tuesday, the 4th of December, and we haven't had a pullback yet, so we had no jumping in point. And again, we want to find a pullback and then a crossing over going back up so that we could jump in. Hasn't happened yet. Could it be happening? Possible. You know, things did top off back on Friday afternoon. Monday did not move above that on our Heikin-Ashi candlesticks. Derivative oscillator is heading down, losing upward momentum. Price percent oscillator heading down. Maybe a pullback's underway, and we might have a jumping in point sometime this week if it resumes an up move after the 4-hour crosses over going down. Want to know more about it, what it is we do here? Of course, we've got a great book out in our 7th printing. Charting Your Way to Wealth is available to you. You can see it in the show notes. Thank you for your patience today, my friends. Hope that you had a great weekend. You're looking forward to a wonderful holiday season coming up. Continue to practice. The more time you have, go over the training videos. Go ahead and download the daily market, weekly market, and trade worksheets. Practice trade. Use the charts that we use on your favorite stocks and other ETFs and see how they work. Experiment with time frames. And of course, if you want to support us over the holiday season, we have a Patreon support account, and we have all sorts of great things that we'll share with you. And don't forget, at the end of the month, we have our quarterly chart. Remember, that's the magical chart that has been accurate over the last 20 years on the S&P 500. In fact, we'll show you how accurate it has been. So make sure, be a Patreon supporter. Tune in every day. Thanks so much for your support. God bless. All the best from the whole team here at Charting Wealth World Headquarters.